So Mr. Meyer, thank you so much for your patience and thank you so much for joining us today. I just want to get your take on the due diligence aspect of the deal. What do you think is the most important thing?
Julie, I love to boil it down to just one important thing. There's a couple things that we look for. The first is making sure we get a very clean read on what the business actually does. Is there a need for that business to exist? The second is to focus on the downside of the business and make sure we understand that in a difficult situation that we have a way to protect our capital. And a third, quite frankly, and where we spend the vast majority of our time, is trying to understand how we create value with that particular investment. And unless we can determine that we can create value with this investment through our in-house capabilities, then chances are we won't make the investment.
Well, the last few years have not really been like 06, 07, the best years. Is there anything you're doing differently in the due diligence process that you were doing before? Maybe more stringent requirements, more careful looks here and there? Anything?
Yeah, it's a great question. There's a lot of discussion about that now. I'd say within our firm, within the Gores Group, we are today and have always been incredibly diligent about the process that we run. That hasn't changed. Where we have, I think, deviated a little bit to the betterment of the work product is leveraging third-party experts in a particular sector or a particular capability that allows us to get a better, deeper read on a particular asset. So we're looking at things now today in sectors that we've never invested in before.
Such as?
We've looked at some stuff in oil and gas and energy, broadly energy. We've not played there before. And honestly, getting someone that understands that space is incredibly helpful to us. Chemicals, similar situation. And we're finding that they can unlock a perspective or a nuance of that particular sector that frankly wasn't obvious to us before. So we're doing that more often than we have in the past. And what I'm finding other private equity firms do is leverage some form of operational capability, whether it's building that internally or leveraging it through third parties to get call it an ops perspective on a particular business.
When you look at a company, everybody says the management is the key. It is the most important thing. Why do you think management is the most important thing? Or if you agree with that statement, first of all, and why?
I completely agree with that statement, and we talk internally about the fact that we've never had a great investment without a great management team. So it's probably one of the most important things we do once we buy a business is making sure we've got the very best management we can to lead that business forward. The nature of the businesses that we buy often require us to make a change of management. In some cases, we'll buy a business that has no management, and we'll need to step in and operate the business for a period of time until we can recruit the right leadership.
As in the current management team doesn't really has the expertise to manage the way you want it to be operated?
Well, even further, I would say there's some businesses that we'll buy in a complex carve-out situation where we're extracting a business from a large corporate parent where there literally is no CEO and there's no CFO. There might be functional leadership, but there may be no top-level senior leadership in the business. So in those cases, we'll jump in and run that business. But that doesn't change the fact that we're trying to find the very best management we can. We're, in essence, driving the transformation program while we're trying to find the management to operate that business. In other cases, we'll buy businesses that have tremendous management. Terrific situation, the business has a lot of potential inside the four walls, the industry dynamics are great. Management, frankly, is looking for a good thought partner, and they're looking for capital to back their plans. And in those situations, we love to step in. A little bit easier than the types of deals we often do. But in all cases, finding the right leadership is paramount to having investment success.
What is the most important thing to become a good management? It's
a debate that I have with a lot of my peers in the industry. If we buy an asset in a particular sector, the question becomes, are you trying to find someone that's got deep sector experience? Are you trying to find someone that's been a CEO before? How critical is that to the search process? And And candidly, I'd say we've had great success in a lot of different scenarios, but generally, great leaders are great leaders, irregardless of the sector. And oftentimes, we're willing to take a chance on a great number two that's looking for their opportunity to step up and be a terrific leader. And in that situation, someone doesn't need to have been a demonstrated CEO before. But those those CEOs that are what I would consider to be great and drive great results versus those that are just okay or frankly aren't able to generate success, I think they are very determined. They move at a very rapid pace. They're concerned about getting most of the issues right, not every one of them, and they drive tremendous accountability across their team. From an investor's perspective, we like the transparency to what's going on in the business, so the communication and the visibility to what's going on is very helpful to us. So we gravitate towards those types of leaders.
All those criteria that you just mentioned, do you have a formula for those? Or it's more like a gut feeling, you've been doing this so long, so you see a talent, you see a talent?
I wish it could be formulaic. It would make it so much easier to find the right leader. And it's tough to get it right 100% of the time. And I think we've gotten much better as a firm in terms of how we recruit, who we recruit, and how we onboard those CEOs to be successful. But you do have to rely to a certain extent on judgment, experience, and to the extent that you work with executive recruiters, getting their input to the process as well. So it's a multifaceted approach, and unfortunately you can't dial it down to a specific equation. Yes. That's right.
And okay, I want to go back to the due diligence part. What do you think is the most overlooked aspect when performing due diligence?
Well, I want to slightly redirect the question, if I may. There's two things that I think are difficult to really get comfortable with and to get some accuracy with. One is having a high confidence view on the entire senior leadership team. The interactions are limited. They tend to be very focused. Depending on the process that's being run, your engagement may be managed by the seller or by the banker or some other facet. And while you do what you can to conduct diligence on the senior leadership team, there's just an element of chemistry that is really tough to get comfortable with through an auction process. That's one area that, frankly, getting that right is really important, and we try hard, as do the other PE investors. But it's not overlooked. But there's a need to find a way to get deeper and to test the chemistry a little bit better. The second thing, which is incredibly hard to get right, and I've talked to a lot of leaders in the PE space over the last, call it 4 to 6 weeks, trying to project the top line of the business is incredibly difficult to do. And inherently, you will get it wrong. You'll either under forecast or over forecast what that business will do. On the cost side, it tends to be a little bit more within your control in terms of how you manage that cost structure, headcount, non-headcount related expenses. But forecasting sales is really challenging to do. And honestly, I don't think anyone does it particularly well. Everyone is out there searching for a way to generate a top-line forecast that's got tremendous confidence and accuracy in it. That I think is probably one of the biggest challenges that people are struggling with.
Is there some sort of tracking index for that? Like, or I don't know, a database that tracks your sales forecast if something is more accurate?
Well, so internally, we're incredibly data-driven and very focused on how well an asset is performing relative to our expectations. And we're constantly judging our performance in the diligence process and the operating partners responsible for that investment against that original investment committee model, if you will.
But it's an internal effort.
It's an internal effort.
Because, for example, if I were an analyst and I forecast the rating of a stock or a one-year target, in 1 year, I will have a scorecard and everybody knows about it. But you're saying, say, in the private equity space, you forecast sales, but you don't really...
And things do change, and we certainly look at a lot of data in the sector of the industry in which that asset participates. We look at a lot of historical data. We try and get up underneath the individual drivers of the revenue stream and try and develop a point of view on where it's going. But it's incredibly difficult to do. Mechanically, we do it all the time, but to get it to a very accurate, high confidence level is quite challenging.
What are some hot sectors right now on your mind?
I think tech and telecom and sort of the subsectors within tech and telecom will always be interesting. There'll always be emerging technologies, niche technologies that will be interesting to people. Aerospace and defense is trading at very high multiples right now, which is probably a deterrent for them to divest of non-core assets. Mm-hmm. So I expect that market to be relatively quiet in the short term. I like industrials. We like industrials. There's some other smaller sectors that are interesting. It'll time will tell whether or not they're sort of an interesting place to put money in 2014. Too early to call it.
Because the government is cutting their defense spending, and you say aerospace and defense is an interesting play.
It has been. If you look at the valuation of aerospace and defense assets, call it over the last 12 to 18 months, it has tracked well above the market. So they're trading at multiples now that they haven't traded.
I know the returns have been very good. I don't know about the PE. I don't know about the multiples, but
multiples have been very high relative to historical levels. They're trading at very high multiples right now.
So going forward, it would not be as active as some of the other.
It may be, but I think the multiples need to come down a little bit, and then I think it could become interesting again. I think we'll see a lot of divestment from industrial conglomerates in 2014, either implied or stated publicly that they intend to shore up their portfolio and divest of non-core assets. So we're hopeful that we'll see some interesting businesses come onto the market next year.
Well, tell us a little bit more about your firm.
The Gores Group was founded by Alec Gores more than 25 years ago. And Alec was really a pioneer when he thought about what the business model was that you needed to have to be successful in private equity investing. And so the genesis of the firm was tech and telecom, but the orientation of the firm was more towards creating sustainable value through operations. So our culture is very ops-oriented. It is a very collaborative approach in the way we look at investments and the way we create value in investments between our M&A leaders and our ops leaders. And it is a model that is less the norm in private equity today. But I think I'm certainly seeing evidence of more private equity firms building operations capabilities inside their firm, if nothing more than to give their M&A guys or their deal guys the ability to do deals they couldn't do without it. It allows them to get deeper on investments that they're looking at, get a better read on that, make sure that they're hedging the risk and have a view on downside, but also creating a value in a way that they haven't done historically. We've been doing this for more than 25 years, and we like our approach. I don't suspect it's going to change anytime soon. We just continue to try and push the envelope a little bit more on how we create value through operations.
Okay. Can I ask how many deals you guys do per year and what is the approximate volume?
On any given year, we'll do between 2 and 5 platform investments, and then something north of 5, somewhere between, call it 6 and 10 tuck-ins across the portfolio.
You said 1/3 of your deals are European-based?
Yeah, about 1/3 of our fund is allocated towards European deals. Okay. And the fund that we're in now, Gores Capital Partners 3, is a $2.1 billion fund. So the vast majority of that's oriented towards North American investments. 1/3 of that, as we discussed, is oriented towards European-type deals.
Europe is coming back, obviously, next to the U.S. And I think it was yesterday or 2 days ago, Europeans' manufacturing is at 31-month high. Do you have a view on European economy? Do you think it's on the right track?
It sure feels that way. I don't have great data around that market, but it sure feels that way. And certainly, now and probably rolling back 6 to 12 months ago was probably a great opportunity to invest. To source deals and invest, and we expect that there'll be more deal flow over the next 12 months than certainly what we've seen in the past year. And I think people are becoming more bullish on what the outlook for Europe will look like. I think it will depend on which country you're speaking to.
Is there any country you guys overweight?
There's not. I would say Germany has and probably will continue to be a solid country for investment for us. We have a partnership with Siemens AG on an investment in the enterprise networking space. But UK and Germany fairly solid. We've also had success in France, and certainly have looked at some deals in France this year as well. I suspect those three countries will be very, very solid for us in that region.
Do you guys have any plan to expand into any other regions? For example, Latin America or Asia?
Yeah, I think we will eventually. We've been very successful as a firm by staying very close to our core business. We understand North America very well. We've developed a very good understanding on Europe over time. We certainly make tuck-in investments that the platform investment may be in North America, the tuck-in may be in Asia. But I think we'll continue to focus on North America and Europe as our primary investment regions.
Okay. Thank you so much.
Thank you.